So I will try not to sound cliche, but that's actually something, it's one of my motto, and I really believe in it. I think AML is not a cost, it's a competitive advantage, but for real, and I will tell you why. So I'm Alex, I'm a co-founder at AMLYze, which exists for now 3 years. We've been very silent for the last 3 years. We've been validating the product, enhancing the core risk engine, and now we're getting a bit more vocal. So AMLYze is a RegTech, basically. What we do is pretty simple and straightforward. We're doing transaction monitoring, real-time and retrospective. We're doing client risk scoring. We're doing any type of screening as well, and we basically have a case management to consolidate all this information. So that's pretty much what we do. I think one of the main assets we have is the team. So in RegTech you have reg and you have tech. When it comes to the reg part, so regulatory, we've managed to onboard a team of experts, among which, for example, Ekaterina Govina was here yesterday with the former head of the supervision at the Fintech unit at the Bank of Lithuania, Mindaugas Petrauskas, with the former deputy head of the FIU over here in Lithuania. So we really have this strong competence from both regulatory and supervisory end. But also from the tech side. We have a super good product and tech team. Pretty much all of them have been working within the fintech industry or financial services for the last 10 or plus years. And I think what's the most important in the end is that basically any one of us, at least at this stage, which is still pretty early, has been in the shoes of the people we're working with, so our customers, our partner. I've been a compliance officer myself, so I've had the problem of the people I'm working with. We have the regulatory aspect once again, so we understand what are the concerns, what are the challenges the regulator and supervisor face, and what they are looking for as well. So we're putting together all that, basically distilling it in our tech to help our client, and I think that's what makes AMLYze different. Yeah. So I will try not to sound cliche, but that's actually something, it's one of my motto, and I really believe in it. I think AML is not a cost, it's a competitive advantage, but for real, and I will tell you why. For me, AML is the art of fintech. If you take the onboarding process, for example, what differentiates onboarding within a traditional bank to onboarding with a fintech is exactly how good the AML process is. So instead of going to your branch or even for a bank doing all the process online, you have your app. You verify your identity. You can expect that pretty much in a real time or in a matter of few minutes, your information are going to be screened. Politically exposure, the PEP check, and the adverse media check are going to be done in real time. And you won't have to do pretty much anything else as a client to onboard. Afterward, all along the way of your business relationship with the fintech or the financial institution is going to happen the same way. And I think that's what makes fintech what it is. The quality of the AML, the quality of the compliance, and the possibility of allowing technology with this competence. And I think that's what makes it exciting and what makes fintech what it is. Yeah. I think it's already changing. I remember here in Lithuania about, I would say, 6 or 7 years ago, a lot of fintech were just obtaining the licenses. So we're talking about very young and new companies, and you could see them launching themselves into their operation with a lot of motivation, plenty of ideas, but very few executive, board member and CEO were really involved in AML CFT matters because they did not have the knowledge, and also because, and we cannot blame them for that, they did not see that as a major issue or challenge for their business. Now, with all the regulatory scrutiny, with all the sanction, but also with the increase in the inherent risk overall when it comes to fintech, you see that these people are actually much more involved than they used to be before. And that's a super good sign. They understand the fact that if you want to succeed as a fintech, you need to understand these matters. You cannot leave it to your compliance officer, your money laundering reporting officer, or your head of compliance. You have to understand that yourself, and I think it's really positive. Now you're right, I agree that we're certainly reaching a level of maturity in this regard, but there is a need for more. So it's good that now the compliance officer and the MLROs are within the boards. It's good that other board members are being involved, but maybe there could be even more knowledge, more trainings for these people, and more involvement in this aspect of the life of a fintech company or a financial service company. I will take the example of a virtual asset service provider. And it's actually an observation we started to make at the end of last year and now, very recently, when we talk with crypto exchanges or other crypto-related business, so overall virtual asset service provider, we realize that most of them, because they are less mature than, say, licensed fintech at the moment, have a lack of understanding when it comes to anticipating the risk they face. So very practically speaking, so as I mentioned, we're lucky enough to have Mindaugas Petrauskas within our team, with the former deputy head of the FIU in Lithuania, which is in charge of supervising virtual asset service provider. And while talking to him and with the FIU, we realized that after the inspection, the recent inspection of the FIU for the virtual asset service provider in Lithuania, one of the elements that was missing was monitoring fiat transaction. So practically speaking, a lot of virtual asset service providers are leveraging blockchain analytics, like Chainalysis, Elliptics, to basically monitor the blockchain elements, the blockchain transaction within their whole business. But a lot of them tend to forget that they need to monitor the fiat flow as well, and they don't do that. The reason why they don't do that, once again, is because there is no scrutiny. So they believe everything that happens on the blockchain, if it's cleared, there is no problem. But then comes the problem when you enter I would say the traditional financial service ecosystem, and when you basically transform your crypto into fiat and the other way around. And here, when we tell this company exactly that, be careful, you're not monitoring, or you're not monitoring enough your fiat flows, they're like, well, all right, is it really an issue? And they tend to put this responsibility on the shoulder of their banks or their payment partner, other partner, because they think these are the licensed companies for this type of stuff, so they are taking care of that. And they don't realize that this is actually something they are responsible for, and something they might be sanctioned for very, very soon. So that's one of the an example of the challenge we face at the moment, like this lack of understanding of the risk some companies face. So it's funny, we had a discussion with a few people about AI and the fact that there was a lot of buzz, obviously, around that. And a bit of maybe what we can call machine washing at the moment. Everybody claims to use AI to leverage it. And I don't remember whom mentioned it, but someone mentioned the fact that AI is actually being used for far longer than we tend to say it. We don't claim to be super AI based at AMLYze, but we already used what is known as behavioral analysis when it comes to transaction monitoring, and which is a kind of machine learning / artificial intelligence. So basically, but has been a few years that exists, there is a shift in transaction monitoring, which is going from just checking the gaps between the transactional activity of your client and their KYC or KYB profile, to more verifying on an ongoing way the profile of their transaction. So basically, if you analyze this, any change of patterns, any peaks of activity within the transactional of your clients, you may want to have a look at it. And that's behavioral analysis, because you're not only referring to the gap between your KYC profile and your client transaction activity. You're actually just looking at the transactional activity and learning the system to detect anything that can be suspicious here. I think at the moment there is one issue, and we were discussing it with many companies, many fintech companies here, which is the fact that a lot of the fintech resources, of the compliance resources in fintech, are being used for stuff which are not bringing value. So practically speaking, I can give you again a practical example. I've been speaking with a team that told me there are 3 in the team. So it's mainly in fintech. Over here, we're talking about small compliance team. There are 3 in the teams, and 2 of them within the compliance team spend, 70% of their time reviewing false positive results. And it's terrible, because these guys have skills and competence which are amazing. And you may have heard as well here, while discussing with different stakeholders, that this is also one of the goals of Lithuania, is to bring up the level of competence of AML CFT professional up to a certain standard. In the UK, for example, there are some level of certification that you need to reach if you want to be a compliance officer. Lithuania is getting there to some extent, so they are basically training AML CFT officer and MLRO so that they can make sure that when someone is MLRO for a licensed fintech, you can expect this level of competence. So from the one end, we expect this level of competence to be high, and on the other end, we use these people to do very low value added tasks. And that's where I guess we can do something. That's where we can say, okay, look, we're bringing technology to you. It's not going to replace your team. It's not going to replace the competence, the skill and the experience of your team, but it's going to help them to shift to some more value added tasks. What can be these? Onboarding new clients, reviewing the AML CFT standard of new products, value added stuff for your company. And at the moment, that's where I see there is quite a gap here. If you look a bit deeper in the gaming industry, the online gaming industry, so basically all these environments where people can play, buy any type of gears or item online, you really have an ecosystem which is initially designed for gaming, but ultimately being used by criminals for many other stuff. Practically speaking, and I think that will be the same when it comes to the metaverse or any type of Web3 application. When it comes to the gaming ecosystem, you can monetize, and not only you can, it's happening. Any in-game purchase bring the opportunity for fraudulent use. It has been demonstrated that within large gaming platforms, some terrorist groups were basically utilizing the monetization of some items. So basically, I buy an armor, I buy an helmet to transfer money to each other. Because you will think at the beginning that this type of platform are completely innocent, and that you have teenagers playing and buying an armor or a pair of shoes or a gun to basically enhance their capacity in the game. But this is ultimately used by people to exchange money. So there is no control, or a very little level of control, and thus a lot of opportunity for a lot of stuff like that to happen. And I think that's what we need to be careful of exactly when it comes to the Web3 and the metaverse. Okay, it might seem very innocent at the beginning, but obviously this is going to be used for criminal purposes. And I think we only have a very small view of the possibility this brings in terms of criminal use. And it's the same for AI, basically. We don't really realize it at the moment because we're only talking about the cool stuff and the hype. But if it can help us in AML, it can certainly help criminals to also possibly automate some of their scams. We've all received these letters. I'm taking a basic example, but this can be applied to many other stuff. This letter from a king in Nigeria that received 6 million on his account, but that cannot cash it out because he has problem with his bank, and that's proposed you to wire it on your account. You can almost always recognize the fact that it's basically bullshit because there are 20 typos. But if AI can make this email look more relevant, maybe it's another increased risk, and this will certainly be. So we always have to think about the risky aspects of any type of new technology, just because, just for the sake of not being just absorbed by the IPM. I think you have to be curious, and again, here I will use a practical example. When I started to work with Simplex in 2017, so Simplex was, just for the element of background, one of the first, if not the first, foreign companies to be licensed here in Lithuania in 2017. And they were, and they still are actually dealing with crypto. So they are basically building gaps between the crypto ecosystem and the fiat ecosystem. And at that time, in the crypto space, it was the wild, wild west. There was no regulation whatsoever, not even standards. And I arrived my first day at Simplex, and I was in charge of anti-money laundering at Simplex, which before that was a non-regulated company. So they had no ideas what they were getting into, or very little. And it's very legitimate, and that's why they hired me. And myself, I was familiar with crypto, but I was definitely not an expert. So I thought, what could I do? And what I did is that I started to play with exchanges, to onboard in different exchanges, to do transaction myself, to use wallet, to mess up with wallet. So basically, when I would identify myself on an exchange, most of them did not require any KYC, but for those who did, and that was actually one way of filtering them, I was trying to mess up. I would take a picture of a plant instead of myself. I would write that my name was Mickey Mouse, and I would see whether I could actually use their services or no. And where I want to get is that I still do that now. I still try to push the system. I just try myself to use the different services. Whatever is new, I'm trying to use it, and I'm trying to see how I can mess with it. So basically that gives me a good understanding first of how it works, and second of whether the control, if there are any, are solid and relevant enough. And I think that's, if I would be a younger version of myself, that's a tip and advice I would love to get. So a lot is happening at the moment. We're raising funds that will help us to fuel our growth. So obviously we want to develop the product, make it better. We have a lot of ideas for new feature, and we're working on that as we speak. Now from an expansion point of view, so we're lucky enough, we're native from Lithuania and the Baltics, which is home to most of the licensed fintech in Europe. That's pretty incredible. So we already have a pool of clients here, but we definitely want to expand beyond the border of the Baltics very soon. So first in Europe, and who knows if that works, maybe in the US as well in a few years. But we already have a lot of work to do here in Europe, and that's what we're focusing on. Now from a product point of view, again, developing new feature, we're trying to stay as close as possible to our customers. We always validate our ideas with our customers. So we may have we may think we have super good ideas, but when we talk to our customer, they are telling us that it's of no use. So we stay close to our customer, and that's the way we develop new product, and that's the way we intend to develop new product in the future as well. Community. Because I mean, you've seen it here. It's incredible. We were here at Rocket in the same room yesterday. You've got regulator, supervisor, people from the fintech ecosystem, I mean, from all these fintech companies. You've got all the third-party provider like AMLYze. Everybody talk to each other. I don't know how it is in Denmark, I know it is in France, but you cannot knock at the door of the regulator and get a meeting the day after. Here you still can do that to some extent, so community synergy, but that's a direct consequence of the community. There are so many ideation and exchanges that it brings a lot of synergy. Stuff get developed very fast over here. That's true for fintech, but also for the tech industry over here. And I think that's the direct consequence of the community. And the last one will be growth, maybe, because everybody is willing to grow, not just from a financial point of view, not just increasing that, but everybody is willing to learn, everybody is willing to do better, everybody is willing to improve. And I can tell you that, again, not only from a fintech point of view, but from many different aspects. If you've been here 10 years before, and if you see how Vilnius is at the moment, it's just a completely different mindset and way of living. So. Yeah.